Financial companies are known to create products they know won't work out, but as long as investors keep putting their money in, sales will do well and their underlying assets will expand. If things turn south in the markets, they will just fire many employees to make back the money. They call it increasing productivity. How does that sound? You came here for the truth, so let me unveil that for you. Today, we're going to look at China, we'll look at Japan, and more. Let's begin. This is an article out of Bloomberg that's talking about perpetual notes. Under pressure to trim borrowings, China's companies have found a way to reduce their lofty debt burdens. Sales of perpetual notes, long-dated securities that can be listed as equity rather than debt on a balance sheet, given that in theory they could never mature, have soared to a record this year as Beijing zeroes in on leverage and the threat it poses to the financial system. The bonds are so popular that issuance by non-bank firms has jumped to the equivalent of $65 billion, more than 7 times the sales by companies in the US. Now, no matter where you look around the world, you will see financial fraud. This happens. Different countries allow different amounts. The reserve requirements on banks may be different everywhere you look. But one thing is pervasive, and that is financial companies are able to multiply their earnings, multiply what looks to be assets, and it's nothing but garbage. How can something be listed as equity rather than debt? It's such a fraud. Chinese issuers love perpetual bonds because they are under great pressure to deleverage. Sophisticated investors should do their homework and shouldn't be misled by the numbers in accounting books. We've been told a lie, that everything is solvent, but it is quite the opposite. All financial institutions, all of the major ones, are all insolvent. We found that out during the financial crisis, and yet today, it goes on. Speaking of the financial crisis, built up after the global financial crisis as the country borrowed its way to a steady growth rate, China's overall debt burden is more than double the GDP, a situation the central bank's media mouthpiece calls a financial mess. All right. Debt finance disguised as equity. That's what he called it. This person here, the People's Bank of China, actually referred to it as the debt finance disguised as equity. And that's what I showed you in the previous portion of this article here. Ironically, state-linked companies have been some of the biggest issuers of perpetual bonds, with more than 60% of the notes sold in 2017 from firms owned by central and local governments. Do you think for a second that it's some rogue entities out there which are doing all of this, and the government wants to crack down on it? Come on, don't be gullible, please. The central banks, all of the wealth funds, the pension funds, all of these big investors, they're all in it together. They all know exactly what they're doing. And we look at everything that's been going on since the financial crisis, it's only gotten worse. There's more leverage today. There's more potential situations that could cause another crisis. Nothing's been resolved at all. Okay, this chart here, deleveraging on paper. Chinese firms' perpetual bond sales hit a record this year. Look at where it's gone just in the past few years. You know, after the financial crisis, in the years following, very minimal. But as soon as this firm footing, or at least what we were told, and growth was projected and all this business, we see all of these type of fraudulent deals taking place. And that's the kind of thing that really worries me. But of course, instead we can just have a party. We can party like the Japanese do, and they're seeking a place to stash their cash. And what are they doing? Putting it in safes. Negative interest rates spur sales of safes, a place where the interest rate on cash is always zero. How interesting. This is from a little while ago, but I couldn't help but think of it today. When you can see that their policies, created by central bankers, created by the governments, all connected in with these financial institutions, result in people taking action. Sometimes they go and yell and chant and scream in front of the banks, depending on the situation. And other times they simply react. And in this case here, the government decides to put negative interest rates on their deposits. So they say, you know what, we don't need this. So they ended up taking the biggest bills they can find and they're stuffing them in safes. It's something I think people should take very seriously. Eurozone credit spreads. So as soon as the ECB announced that they're going to buy all the garbage for all these corporations, the spreads have been declining to extremely low levels. What does it tell you? If the central bank is willing to buy up every last bit of garbage that any of these companies or any of these other local governments or anything that is willing to be a burden to the system, supposedly, what does that tell you about risk? Suddenly, there's no more risk. There is no more risk. There's no more volatility. There's no more cause for concern. But I present you with one argument to that. Imagine just for a moment, this was 2005, 2006, and there was no risks, nothing to worry about. And subprime crisis happened. You saw the financial crisis starting to creep inward because of all the derivatives. Why didn't the central bank drop interest rates to zero or even into the negative and print $1 quadrillion? Why not? Buy up every share of the stock. As each share that's sold, the central bank could have come out and just bought that share. Every single one. And maintaining the level, at least keeping it stagnant until real investors came in. Print up $1 quadrillion. Make the stock market go twice as high. Why not? Why not print up all that money and give it to every single citizen? Give them a paycheck. Give them 10 grand. Just give them that 10 grand. This would spur the economy, get things going again. But they don't do that. Is that because they're selfish? No, because when you do this, they know that it destroys the currency. It always does, every single time, 100% of the time, and yet we see countries doing it today, and it's just incredibly treacherous to watch this type of activity going on in the financial system and see how it affects people in their daily life. That's all for this video. If you found it informative, please give me a thumbs up. And if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature that will allow you to flip through the pages of these books to see if you like them. Take care.